and good afternoon, everyone. My name is Prita. I'm from the Consumer and Investor Office at the Securities Commissions Malaysia. Welcome to today's Investment Online Series webinar. Today's webinar is on P2P financing. Is it a path to profit? First of all, we'd like to thank you for taking your time to be here today. We are pleased to have with us today Mr. Brian Leong, the Chief Financial Officer of CrowdSense Sdn Bhd, to present the topic of P2P financing. Is it a path to profit? Please stay tuned till the end of the session, as we will be having a short Q&A question followed by a pop quiz session for all the participants. As mentioned earlier, a total of 1,500 ringgit online vouchers are up for grabs. There will be 5 top winners and 20 consolation prizes. The winners will receive an email within 24 hours. Further to this, we would like to invite all the participants to participate in our survey. The link is shared in the chat window. Next, please. Please do follow us on our social media platform for useful information on investing and the latest update on our initiatives. Now, I would like to invite Mr. Brian to share his presentation. Let me share a brief background on Mr. Brian. Mr. Brian has more than 11 years of experience in auditing and investment banking, including the areas of capital raising, due diligence, valuation, equity capital market, and financial services. He is tasked with overseeing the areas of accounting and corporate finance for co-founder. With this, I will pass to Mr. Brian to share his presentation. Thank you.
Thank you, Peter. Let me just try to share my screen now. Okay, good afternoon, everyone. Thank you for joining this session hosted by Investment and Securities Commission Malaysia, as well as co-founder, a registered P2P operators with the Securities Commission Malaysia, running a P2P or peer-to-peer financing platform. Let me just have a quick overview about myself. My name is Brian Leong. I'm the CEO or co-founder under the registered company of CrowdSense Sdn Bhd. Today, I'll be talking about the P2P investment financing, whether this is a path to profit. So without further ado, let's go through about what the topic I'll be covering today. So a quick overview of the topic today is that number one, we'll be covering about what is the background of P2P financing or P2P investment note in general. We'll be also touching about how to invest in the P2P financing upon understanding what is P2P in general. Not forgetting as well that we'll be also talking about why you should actually invest with the P2P operators or registered P2P platform operators. And upon understanding all of the P2P in general, it is also good for all the investors, all the participants here to know what are the advantages and disadvantages of investing in P2P. Last but not least, as what has happened in the past few recently, is that it's very, very important as well for everyone here to also know how to spot an investment scam. So without further ado, let's just jump to the first topic. So what is P2P financing? So P2P financing in general is basically an arrangement where businesses or business owners, I will call it as issuers, request for financing, and at the same time investors fund the financing request. So if I can put it in a very, very simplistic diagram, is that a business owners or issuers who wants to raise a financing request of, let's say, 10,000 ringgit, they will do that on the platform or the registered P2P platform, such as co-founder and the other 10 platform operators. And upon that, upon the approval of that financing request, that financing request would be made available on the platform operators via an investment note, where all the investors or the retail investors could actually crowdfund that financing request. So upon meeting the requirement of, upon meeting the financing request of 10,000, the whole campaign or the whole financing application campaign period will be deemed successful, and the fund will be disbursed to the issuers. So upon disbursement, after that, the issuers will need to pay the financing or the cost of financing, and investors at the same time who have crowdfunded the financing request of 10,000 ringgit will receive the principal together with the interest back. Okay, so this is in summary what is P2P in general. So P2P today, the objective of P2P today is to provide capital for companies mainly for expansion and as well as working capital. And at the same time, P2P provide returns to investors. For the statistic up to 31st December 2020, P2P have successfully landed more than 15,000 campaigns, funding a total amount of more than 1 billion ringgit. So what does this mean is that from the launching of 2016 up until 31st December 2020, investors has helped close the financing gap that the SMEs require of close to 1.14 billion ringgit. Okay. Of course, at the same time, investors also have received the interest paid by the issuers. So both sides have already enjoyed the benefit of the P2P community as a whole. To facilitate the financing request for issuers and investors to invest, P2P typically are done via an investment note on the P2P platform. A sample of the P2P investment note is as follows. So in a very simplistic and quick overview is that you have a type of repayment or you have the type of financing on top, which is the working capital financing, and a few information such as the target financing amount, repayment tenure, over here you could see it's a 12 months period, simple interest rate of 12%, type of repayment, and we will discuss that in greater detail later on, and as well as the type of collateral. Okay. And of course, not forgetting as well, on top there, there's the credit rating or credit score of CR4, which is tied to the probability default of 4.45%. So this is something that is actually very important for all the participants or investors who wants to invest in the P2P to understand what is actually a credit rating. Okay. And moving on to the stages of P2P financing, as what I've mentioned earlier, P2P financing consists of two stages of period. The first one is the campaign period, and after the campaign period, you will move on to the repayment period. So what differentiates between the campaign period and the repayment period is that campaign period basically is the period where the fundraising is undergoing. So what happens is that, as we seen in the previous diagram, when the issuer raises a financing request in the P2P operator platform, that request will be crowd-funded by the investors. So that period is called campaign period. So campaign period, there are two outcomes for that. The first one is successful, and the second one is, of course, unsuccessful. Okay. So the successful consists of fully funded and minimum funding amount of 80%. So what happened is that out of the 10,000 ringgit example that I mentioned earlier, if the campaign period achieve 80% funding status of say 8,000 ringgit, then the campaign can be deemed as successful. And upon meeting the fully requirement of 10,000 100%, the campaign period will be closed and no more funding or no more commitment will be received. So there will not be a situation where the funding will go above 100%. So the good question is that, what happens if the campaign period does not reach the 80% minimum requirement? So it will be deemed as unsuccessful, and those investors who have come in and commit to the investment refinancing request would be refunded back, and they could actually invest into other types of investment note or financing requests. So all in all, the process is very simple. As long as they meet the minimum 80% requirement, then the campaign will be deemed successful, and it will move to the next repayment period, where the issuers would have to pay back whatever that the financing that have been requested or have been crowd-funded by the investors. So the typical repayment period in the market at this point of time consists of three types of repayment period. First one is equal installments, followed by bullet repayment as well as interest-only repayment. So what are the three different types of repayment in general? So equal installments consists where the principal and the interest that is required to be paid by the issuer are paid equally on an interval basis, such as monthly or quarterly. Bullet repayment on the other hand is basically the principal by interest, but paid only at the end of the tenure or at the end of the financing tenure. Whereas interest-only repayment is a hybrid between equal and bullet, where the interests are paid equally on an interval basis, such as monthly first, then the principal are only paid at the end of the investment tenure. Okay, so taking the three repayment period as an example, let's say we put this into a situation where there's an investment note crowd-funded by all the investors with an amounting to 120,000 for a period of 6 months, that give a yield of 6%, that give a yield of 10% per annum with a credit score of CR3. What this investment note will entitle the investors is that all the participants who invest in this note would be entitled to an interest rate of 6,000 ringgit after apportioning a period of 6 months and the interest of 10%. So all in all, investors who invested in this investment note would get back 126,000 at the end of the investment tenure. So if you put that into the all the three types of repayment, so for an equal installments, the investors will receive an equivalent of 21,000 on a monthly basis until the end of the last repayment date. Whereas for bullet repayment, the full 126,000 will be received on the last day of repayment, and for the interest-only repayment, the repayment will be segregated into two. First, the interest will be paid on a monthly basis until the last day of the repayment date, followed by the principal will be paid on the last day of the repayment, which is on the 1st of July. So all in all, if you look into this, the 126,000, regardless of which type of repayment, the investor will still receive a full sum of 126,000. Of course, this is still subject to the platform fees and as well as the type of other risks that we should discuss this in a subsequent slide. Okay. So upon understanding the general overview about what is P2P or what is P2P investing, now we should actually move into how to invest in P2P financing investment note. Okay. So the first question that you should be asking about why or how to, before we actually jump into the process of how to invest in the P2P, is that we should actually ask why would you invest in the P2P investment or P2P asset class. Okay. So before we draw into that, we should actually jump into the first basic of investing or basic of investment. Okay, so if you understand about the basic of investing regardless of which asset class, is that the first and foremost you have to actually understand what you have to understand and able to calculate or estimate what will be the rate of return. And at the same time, without only focusing on the rate of return, we should also estimate or forecast the level of risk that is tied to that investment product. So in a simplistic term, estimating rate of return consists of forecasting the rate of return and as well as understanding what will be the level of certainty. So if I took an example as simple as a class would be let's say for example a fixed deposit. Fixed deposit is agreed upfront. So when you jump or when you enter into a fixed deposit, the rate is mentioned earlier. So for example, you invest into a fixed deposit of 10,000 ringgit. The amount of the interest rate is actually fixed upfront. Let's say 2%. You definitely get at least 2%. So the level of certainty is 100%. Okay, and of course the level of risk tally to this fixed deposit. The probability of losing capital is very minimal, so it's close to zero. And estimating the worst case scenario of investing in fixed deposits is as close as zero as well. But of course, we still have to take into account on the financial standing of the financial institution who carried the responsibility of investing in that commitment of fixed deposit. We can also take into account on other asset classes, say such as cryptocurrency. Okay, so for those of you who are very, very familiar with what is happening in the past few days in the cryptocurrency, I believe that should always be mindful that the level of risk in asset classes such as cryptocurrency sometimes could be pretty volatile. Equities as well, sometimes you cannot disregard the risk or the volatility to that particular asset class. Okay, so the good thing about P2P is that in general is that when you forecast the rate of return for P2P, it's very straightforward because the rate of return is disclosed in the investment note. I mean, if you recall the earlier sample that I just disclosed, there's an interest rate. So that interest rate is basically the rate of return that the investors will get. And the level of certainty will depend on the level of risk. Okay, so it's very, very important for investors who wants to go into the P2P asset class to also understand the level of risk in the specific investment note. Okay, so there are many types of investment note. You can actually I'll go through in detail in the subsequent slide. But here, the basic of investing in P2P is that since the rate of return is easily captured or easily pick up, so investors should actually assess more on the level of risk when you invest in the P2P investment note. Okay, So taking that into an overview of the overall asset class, when we refer, so here what we can deduce is that the lower the risk, the lower the rate of return, right? But at the same time, the higher the risk, the higher the estimated rate of return. So if you're referring to the top two asset class, cryptocurrency and equities, the rate of return can go up, let's say, more than 20%, more than 100% respectively. However, the risk is considered a medium to very high, especially for cryptocurrency. While I'm not the expert in financial advice here, I mean, each and every investors here and the participants should actually consult their own financial advisors. But taking into account the asset class and the various asset class here, I think it's very important when you do an overall asset allocation to actually understand what would be your investment goal and to actually tally to whatever asset class that would tally to your, of course, to your investment goal. So the understanding is that why should you invest in the P2P asset class is that first and foremost, of course, P2P asset class requires a very minimum investment requirement. Okay, so you can invest even as low as 50 ringgit or 100 bucks. Okay. I mean, I believe that when you want to lock yourself for the fixed deposit, sometimes there's a minimum requirement. You can even go as low as I don't know. I think fixed deposit, sometimes the commitment will be in the range of about 10,000 or 1 ringgit, 10,000 ringgit or 1,000 ringgit. So sometimes fixed deposit, even though it's very certain, but they require a very minimum investment requirement. Okay. So of course, the good thing about P2P asset class is that it generates higher return than a fixed deposit. And the most important part of the P2P asset class is that it allows investment duration matching or cash flow matching. So what does this mean is that for investors who wants to invest into a P2P asset class, they could actually properly plan their cash flow requirement that tallies to the duration of that particular P2P investment note. For example, a P2P investment note, they have an equal repayment of 12 months. Okay, so investors who wants to invest, they could actually tally to the cash flow requirement to these 12 months repayment by the issuers. Of course, they're subject to like certain risks that tally to the last, the default and the delay in repayment. But if you could actually tally your cash flow requirement or your investment requirement, right, to the cash flow that was the cash flow of that type of repayment, then you can better actually maximize your return in your asset class. Okay. Of course, and last but not least, it's relatively easy. As long as you are admitted to become investors in the platform operators, investing in P2P investment note is as easy as a few clicks away. Okay. So that all in all is why you should actually consider P2P as part of asset class. You could actually take into account on ranging going into a more volatile or more risky investment. But I mean, P2P at the end of the day, it helps to actually balance out the risk that you are carrying. So again, I'm not an expert in asset allocation. This one you should actually consult your respective financial advisors on this. So carrying out to the point number 4, easy process. There are typically 4 steps process in investing in a P2P investment note. So the first thing is that what you could do as a participant or future investors of P2P is that you could browse through the list of registered P2P operators on the Securities Commission Malaysia website. So if you go into the digital initiative, you could click on the regulated fintech players, and over there you could see all the fintech players that are registered with the Securities Commission Malaysia, such as ECF or P2P. So under the P2P there, you could see 11 operators all live at this point of time, and they are ready to serve you. They're ready to serve you with all the investment notes. Okay. So upon understanding like which platform operators that you want to go in, next you can actually go through the list of available investment notes on each respective platform operator. And you could assess basically what will be the rate of return. So this will be a sample of investment note overview. So you could see what is the risk rating over here, interest rate, followed by the tenure, 12 months amount to be financed, and as well as the funding status, and not forgetting the most important part is the fact sheet. the information that investors should digest in greater detail to make a very good investment decision at the end of the day. Upon ascertaining like which investment that you want to invest, the next step is just to deposit. It's as easy as a few clicks away. Typically, all the deposit process in all the platform operators are done by a regulated payment gateway. And upon topping up your wallet or depositing your fund, you could then proceed to invest by just clicking a few clicks away. So there you go. You have started your journey of investing in P2P. And for those who have invested in various investment notes in P2P, congratulations. You have actually helped all the SMEs up from 2016 up until today. So without further ado, these are some of the examples of the investment note or the fact sheet in greater detail. So typically, a fact sheet would consist of the type of financing at the top there, and the display of the credit score or the credit rating are displayed prominently on the top as well. For example, this investment note carry a credit rating or credit score of CR4 that tallies to the probability of default of 4.45%. And of course, you have all the other financing details, such as the targeted financing amount of 20,000, repayment tenure, interest rate, and as well the type of collateral. Okay, and moving on to the other type of investment note, fact sheet. Here, we are looking into a type of financing of insurance premium financing, and an overview of the credit rating, target financing amount, repayment tenure, as well as the interest rate. So the most important part that investors should be looking as well is that when they look into an investment note, right, they should not just look into how much return I should get, okay? They should also look into how they could actually address the risk. Like for example, here there's a type of collateral. So there's a collateral provided, yes, and there's a type of collateral, which is assignment of insurance proceeds. That should tell you to how this note could be will be managed in the event of default. So in addition to that, in addition to the basic information on the investment note, typically a fact sheet also consists of repayment schedule. So investors do not need to calculate in greater detail. So here, the investment repayment schedule would consist of detailing what will be the principal to be paid on a monthly basis. So this is basically the type of equal installment for the next 12 months. So you could get an overview of what will be the principal to be paid, interest on the third column is basically, and the middle column is basically the gross interest. And next to the interest is the platform fee that all the operators will charge. And at the end of the column would be the net proceed or net interest and the principal. So that will be the total proceed that the investors should be receiving. Okay, of course, I think the account on what will be the investment that the investors is putting up. Last but not least, a typical investment note or fact sheet will also highlight or give an overview of the financial highlight. So over here, you can see a very quick overview of how is the financial standing, a quick overview of the financial standing of the issuer that wants to raise a financing note. So it's very important for investors, right, before they jump into the decision into investing, right, to have a quick overview or quick understanding of how the issue or the investment note that they are going to go into, so they could better understand or better assess what is considered a good investment note or what would be considered a good investment at the end of the day. Of course, the platform operators have done the bulk of the work, by summarizing the credit scoring here and there. But I mean, for investors, sometimes do not just rely on the platform operator's assessment, but also to do your own assessment and understanding in determining which investment note that you should go in. Okay. So upon understanding of how to invest in the investment note, now it's very important as well for all the participant investors here to also understand why you should invest with the registered P2P operators, or 11 P2P operators are there in the market as of today. So the first and obvious reason, the first one is regulated, of course. All the 11 P2P operators are regulated under the Securities Commission in Malaysia. So what does this mean is that in order to run the operation of the P2P operators, we are bound by the SC guidelines for the regulated market operators. And only upon approval by the SC, then only all these 11 P2P operators are allowed to actually run their platforms either through the website or the mobile apps. So an obvious reason is that it's of course regulated. So when you're regulated, you are under the purview of Securities Commission Malaysia. You're required to actually report back to Securities Commission Malaysia on a regular basis. And because you're under the purview of SC, all the 11 P2P operators are required to actually set up a trustee account. So what do you mean by trustee account? Is that trustee account is basically the custody of fund. So what I'm trying to say is that a trustee account, right, would be when there is a situation where the platform operators could not actually lay claims on the fund. So, for example, investors who deposited the money to the trustee account, that deposit or that capital, right, could only be used for specific purposes, such as disbursement to the issuers and getting back the proceed from the issuers when they have to repay back according to the term of repayment, and of course executing the order from the investors when they want to withdraw the money from the trustee account. So all in all, trustee account is a good protection that was done by the Securities Commission Malaysia, because basically the P2P operators could not lay claim on that fund. Of course, the other important requirement is that the disclosure requirement that are required by the guidelines is that SC requires all the platform operators to disclose enough information for all investors to make a good decision making when they want to enter into any investment note or P2P investment note. And the other part as well is the KYC, or know your client, or the credit reporting. So this in summary is basically the requirement that all the platform operators will need to do when they're admitting new issuers or new investors. So what we are trying to say here is that all platform operators are required to actually assess the risk of each individual issuers, and also to assess what will be the credit level or credit credit status of the particular issuers. So only creditworthy issuers would be, I would say, let me just use the right word. Only those issuers who has passed a credit check would be allowed to admitted to the platform operators, and they could only raise a financing request subsequently. And I think in the past few recent weeks as well, SC has been pushing on a more Sharia compliant method to meet the requirement of those investors who seek to invest only in a Sharia compliant investment note. A very understanding what the Sharia compliant is that the trustee as well have to be Sharia compliant. And the good thing is that the investment as well would only admit the issuers who is having a business under the Sharia compliant rule. So all in all, why invest in the registered P2P operators, or why register in the regulated P2P operators, is as simple as it's regulated, and all these P2P operators are responsible to SC and they are required to report to SC on a regular basis. So investors who invest in the regulated P2P operators, I think they have more ease of mind as compared to investing in those unregistered P2P operators. Other requirements that are required under the SC guidelines that only a few issuers are allowed to raise funding on the P2P platform, such as those companies as locally registered with the SSM Malaysia, excluding listed public companies. So long as the public company is unlisted or not listed in any stock exchanges, they could actually raise a funding on the P2P operators platform. Okay. And second is companies with a specific business plan. They need to basically they need to mention about what would be the target intended utilization of proceeds. And this utilization proceeds could not be used for making loans or making investment in other entities. So in summary, it's like a SPAC or special purpose acquisition vehicle are not required, are not allowed to basically raise funding on the P2P platform operators. Last but not least, of course, any type of entities that are not prohibited by the Securities Commission Malaysia. So if the entities fall under the SC alert list, then that entity will not be allowed to actually raise funding on the platform operators. Okay. So with that in mind, so let's jump into what would be the advantages and disadvantages of investing in P2P. Okay. The advantages, as disclosed earlier, is that it requires a very minimum investment requirement to generate high return at a fixed deposit, and of course allow the investment duration matching, cash flow matching as well as mentioned earlier. So investors could better plan their investment according to their cash flow requirement for the next few period of time. And of course, it's easy. And it's just a few clicks away before you get to invest in an investment note. Okay. However, taking that into account as well, we should also address what will be the disadvantages in investing in a P2P investment in general. Okay. The first and foremost, of course, is the risk of default or losing your capital in the event of non-repayment, and as well as a delay in payment. Okay, so this has to be taken into account. So even though it allows the investment duration matching, but sometimes the risks don't come in place. So for example, when there's a non-repayment or delay in the payment itself. So there are two types of risk in general for P2P investing. First is the default or non-repayment, and second, for the default or non-repayment, sometimes it comes into a situation where there was restructure the note and the payment might get delayed. Okay, but the good thing about this risk is that I think in the past few years since the launching of P2P operators, I think all of the platform operators have done their due diligence, have done their effort in order to mitigate or address this risk. So, for example, among all the types of investment that is available in the market here, I think in general the mitigating action for investors is actually to diversify as much investment note as you could. So when you diversify, at least you reduce your risk or your exposure to a certain particular investment note, that in case it goes default, it goes delay in payment, then you can still cover that the rate of return from the other diversified investment note could still cover that note that goes into default or delay in payment. So of course, there's a lot of protection that surrounds the investment note itself. For example, under the working capital financing, there's a collateral or personal guarantee given by the shareholders or the management team. Invoice financing, of course, is backed by the invoice itself. So in the event of default, the operators can lay claim on the invoice itself directly. Asset financing, asset collateral, of course, and as well as personal guarantee. So you could actually go and claim or do a collateral, a claim on the asset itself when there's an event of default and delay. And of course, not forgetting the insurance premium financing, in which co-funder of CrowdSense is proud to be the first P2P that rolled out this type of financing. And there's a principal recovery embedded element out of it. So in the event of default, CrowdSense could actually get back the principal. So at least investors who actually invest in insurance premium financing do not need to worry about their principal loss in the event of default or delay in payment. So all in all, other initiatives by the platform operators that we have seen in the past is that there are certain measures that's been done by the P2P operators, such as getting a third-party support on a particular investment note in the event of default and the event of delay in repayment. So at least investors have that ease in mind that their capital will still be protected in the event of the above default or delay in payment. So all in all, I mean, it's a good thing that I think since 2016 up until today, there's a lot of effort. More than 1 billion has been funded in general. So this is something that the platform operators have learned throughout the years and came out with a more so-called innovative one and a more protected investment note in order to help investors to better understand or to better maximize their rate of return at the end of the day. So after understanding about the overall overview of the P2P investment, I think the last and foremost is also to understand how to spot an investment scam at the end of the day, okay? Because it's quite rampant, and recently, when we read newspaper, we always see like 1 or 2 new cases of investment scam on a weekly basis. I wouldn't say on a daily basis, I should just say on a weekly basis. So the very red flag that we can actually address when we see an investment scam is that, of course, the first one is unregulated, not tallied to any governing body in Malaysia, such as Bank Negara or Securities Commission Malaysia. And if it's not, if it's a listed company, then they are not regulated by any stock exchanges body. And secondly is, of course, promising unreasonably high return. So if you make a comparison with other type of asset classes, maybe like certain investment product, they'll give you a very high return in a short period of time. So that always raises a question mark whether that investment product is genuine or is a scam. Third, this is common, offering unusually high incentive for a higher amount of investment. So, for example, you invest above 1 million, you can get a rate of return of 30%. But if you invest in less than 1 million, maybe your rate of return is only like 5% kind of thing. Last but not least, I think this is sometimes very, very misleading and not appropriate to use the term such as guaranteed return or a confirmed return that you will get in 3 months' time or something along that line. So investors who wants to know about this investment scam could actually go into SC website, and there's a dedicated section on the called the investor alert list where the name of the investment product as well as the investment company that SC has put under the alert list, and investors could make a good decision or good understanding in looking into which investment product or investment company they should be wary of. Okay. So in summary, P2P investment and financing, whether it's a path to profit or whether is it a path to profit. Well, to answer that question is that it's always a good idea, of course, to include P2P asset class into your asset allocation, because in general, that's what I've earlier mentioned, is that P2P investment allow investors to better plan their cash flow, to allow more on the investment duration matching at the end of the day. So, but in order to answer this question, all participants or investors have to come back to the basic question again of basic investing, of how do you estimate the rate of return, and how at the same time estimate the level of risk that's tied to that particular asset class or investment product. Okay, so in order to do that, you have to optimize basically your return risk level by maximizing your return and of course mitigating the risk. Okay. So for a P2P investment as a class, as what I earlier mentioned, is that the risk itself is very prominent. Of course, sometimes all investors, in fact, all investors have to actually consider how to mitigate the risk by all the actions that I've just described earlier. So if you could actually address the risk of investing in P2P, then it's only the matter of actually maximizing the return, okay, at the end of the day. So would that answer your question of whether is it a path to profit? Well, I believe that everyone has the answer right now in your mind. So with that in mind, I'll thank everyone for participating in this discussion, and I hope this is a good ROI for everyone here who listened during their lunchtime, and of course to those who's having a fasting period. I hope this is a good ROI for your time. Thank you, and thank you. Yep. Okay. We have a special promotion running on our platform. Here, if you sign up today and put the referral code of InvestSmart, you will be entitled for a small sign-up bonus, which can kickstart your investment journey in P2P investment. Okay. With that in mind, shall we go to the Q&A?
Okay, thank you very much, Mr. Brian, for the very informative presentation. As mentioned by Mr. Brian earlier, there's actually a rise in scam recently, and we would like to re-emphasize to the public to never deposit money into individual bank accounts for the purpose of investment. Okay, now we'll be moving on to the Q&A session. We will just give Mr. Brian some time to pick on a few questions.
Okay, so the first question that I have here is, any minimum amount to invest? I think that one I have already answered. I think some operators allow a minimum investment of as low as 50 ringgit. But I think in general, I think all the platform operators have a minimum investment of about 100 ringgit. Yeah, so you can start as low as 100 ringgit to begin your first investment journey, or to even diversify your investment in the P2P investment note. Okay. There's a question here. If a campaign period is unsuccessful, do investors get back 100% of the invested money? The answer is yes. Yes, they will get back their principal immediately upon that confirmation that the campaign period is unsuccessful, basically. Okay. Can you elaborate on insurance premium financing? Oh, okay. So this one, the premium financing, the co-founder is offering, is basically financing to procure, to buy general insurance. Okay, so it's as easy as helping the SMEs who needs to buy a general insurance in which the repayment typically are paid upfront. Now they could actually get this financing and repay or match their upfront repayment of the insurance or general insurance to their say yearly cash flow or whatever period that actually matches their cash flow lah. Otherwise, they have to be burdened with the upfront repayment of the general insurance. So of course, from the investors or the crowdfunder investors' perspective, is that if you participate in the insurance premium financing, there's a principal protection mechanism that in the event of default or in the event of non-repayment, then there is that principal protection mechanism that we always recover the principal back. What is the default rate and how is the recovery if any delay or default? This is a very good question. I think I should address this in greater detail. What is the default rate? I think this is the biggest risk because, like what I mentioned again, right? I think estimating the rate of return in P2P is very straightforward because the rate of return is what's stated clearly in the investment note. Okay, but I mean when you look in greater detail about the risk on investing, or like for example, the default and the non-repayment, right? There's a lot of cost of action when there is a delay or default. For example, the first thing would be to actually enter into the arrangement or enter into a discussion with the issuers, right? To see what will be the next course of action, whether you need to restructure the investment note or the repayment, or I mean, in the unforeseen circumstances, which everyone doesn't want to go there, is to actually lay claims on the asset. I think that one is really the unforeseen circumstances that all the platform operators would want to go into. But so typically, I think would be going into restructuring to ensure that all outstanding principal and interest are paid according to the new restructuring in terms of. So what is the default rate, right? I think this is I think across all platform operators, it's not the same. I mean, you can just go to the respective platform operators and see what will be the default rate. But again, it's very important to consider about the mitigating action in order to minimize your default or the risk that I've actually mentioned earlier in investing in P2P. What is the growth rate of investors and issuers since inception and from 2019 to 2020? I think now I don't really have the actual rate, but now I think the education has been made because since this type of digital initiative has been launched since 2016. I think there's a lot of investors that are aware of P2P investment, and there are a lot of business owners nowadays aware as well that if they need financing, they don't just need to go to banks or along. They can actually go to P2P as well to consider closing their financing gap. From 2019 to 2020, what will be the growth rate of the investors? I don't have a very specific number on that, but I'm pretty sure that nowadays people are pretty in the know about P2P or any type of digital initiative investment. Does this platform have an app in order to make it easy to access from mobile phone? Unfortunately, no, we have not launched our mobile app yet. At the moment, we are still under developing. It's still under development, but rest assured that we'll try to launch the mobile app as soon as possible. But at the point being, we are running on a mobile-friendly website, so you could actually access or browse through our investment note on your mobile browser as well. Okay, why do companies choose to fund using P2P and not bank loans? I think the very obvious reason is that sometimes bank credit requirement is more strict. Okay, I think if you are aware that sometimes they require a lot of financial assessment, number one, and number two, typically take longer time. Of course, with the recent improvement that they have gone into. But I think in general, banks is actually more strict. And second, they are taking a more so-called conservative approach, because at the end of the day, for banks, right, if you are aware of investing in financial institutions, is that they always look into what will be your NPL rate at the end of the day. So each bank, when you look into it, right, they always disclose what will be your estimated non-performing loan rate at the end of the day. So when your non-performing loan rate is actually very high, right, that would impact the valuation of the financial institution itself. So that's why for banks, right, they're actually very, very strict in assessing the credibility of the SMEs. So, but in another point of view, right, are you saying that P2P is not is compromising on the status of the credit check or credit status or financial standing of the all the fundraisers? The answer is not really, because I believe that all the P2P platform operators also have their reputation to assure of, so they have to go to a proper credit checking and credit reporting, credit checking when they emit an issuers or when they emit a particular investment note when they want to do a fundraising exercise or fundraising campaign period. So you see, at the end of the day, right, there's still a funding gap that the bank sometimes doesn't lend to a few companies, which this is actually which the P2P is trying to fill up, because outside there, right, there are a lot of companies. They are good, but they just can't meet the requirement by the bank. So a typical example is that the number of years in operation. I think banks have that minimum requirement, okay. So for P2P operator platforms, when they could go to the credit standing of the companies itself, so I think if they can actually satisfy that they are a good paymaster, right? So that could be considered as one of the good so-called good thing to admit that particular investor. So that's why it's the reason that why SMEs are not going to the banks, but they go into the P2P operators instead. What is a typical return from your past experience? Okay, so insurance premium financing, I think in general, because it's pretty safe, right? My past experience that I've seen is that the return varies from between 8 to 12%. Are there any? Yes. Are there any processing fees? The answer is yes. There are processing fees. So the answer, I think some of the example that I put in, for example, the example on the 120,000 investment note A, with the interest of 6,000 ringgit, that is gross before any processing fee or any platform fees. Okay. So I believe that typically platform fees or processing ranges between 1 to 2%. So you have to take that into your calculation when you want to calculate your net so-called net return. How long for the pledge fund to be successful? Okay, the timing for the pledge fund or the commitment period during the campaign period, right, actually varies. Okay, some operators run a longer campaign, so sometimes maybe up to 1 month. So it depends. Okay, some also run in minutes as well or seconds. How do you calculate the probability of default? This one, I don't really have a definite answer. I think different platform operators has different formula to calculate the probability of default. Okay, but for, let's say for so they have a different formula to calculate the probability of default. Is there a standard guidelines or factor across industry? I don't think so. But the good thing is that in formulating the formula for in formulating the probability of default, right? I believe that all the platform operators rely on the third-party credit agency in Malaysia. So that itself basically could give so-called indirect standardized across calculating the probability of default. Of course, but they still have different platform operators have different formula in determining the probability of default. What investors could do if the company that the investors are not fulfilled? I mean, you're saying that, let's say the investment is not successful, right? So the good thing is that if it's not successful, then the commitment that you have put in, right, will be refunded back to you immediately upon confirmation that that particular investment is not successful. So you could actually either withdraw that deposit that you have done or reallocate that money to another investment note that meet your investment target. How to compute the risk of portfolio? Example, you invest in 10 investment notes with probability default of 3%. Okay, how? Okay, this one is very, very interesting question. Let me just address this. Okay, so I think typically if you are investing 10 investment notes, right, in order for you to do a calculation on the probability of default of 3% would still be very it's very redundant, meaning you cannot really calculate the probability of default if you invest only in 10 notes. Probably the number will be better if you invest in more notes. For example, up to say 100 notes, then the probability of default of 3%, you can actually adjust it straight away to that 100 investment notes that you have actually entered into. Okay, any more question? Okay, so let me just reiterate one more time for each and every participant or investors here that wants to go into the P2P asset class. Always understand the level of risk that you are investing into, and of course just do a quick calculation about what would be your preferred sector, for example, and of course you could diversify as many investment notes as possible in order to address your default risk at the end of the day. Frida, over to you. There's no other question.
Thank you everyone again for joining us today, and thank you CrowdSense for speaking in our webinar. Hope to see everyone again in our next webinar. Thank you.